Hi everyone, welcome back to Beach Podcast. So today is the birth anniversary of Benjamin Graham. He is highly regarded as the father of value investing. And in this video, we are going to discuss about three things. The first thing is in the book, The Intelligent Investor, the author refers to the market as Mr. Market. And what does author mean by Mr. Market?
Mr. Market is everybody but you who's participating in the stock market.
Okay.
That's what Mr. Market is. Everybody else other than you who's participating in the market are the ones who decide price movements on the market. They are the ones who decide what is valuable and what is not valuable.
Okay.
You do not decide what is valuable and invaluable. But the funny thing is, you are Mr. Market to those people. Let's say somebody else is there, your friend who's buying and selling in the market. You are part of Mr. Market for him.
Okay.
So that is what Mr. Market is.
So he talks about the ecosystem.
The ecosystem, yes. And he basically says Mr. Market is not rational, and Mr. Market is not logical, and Mr. Market is more than anything emotional. So they make fun of the fact how markets react to news and have knee-jerk reactions more than thought-out, processed reactions. We all assume to be intelligent people, that we take rational decisions, we don't scare the dark. But all of us, when it comes to reality, are very irrational, and we behave purely on our emotions than what is there in evidence.
Okay. And the second thing I would like to talk is the author refers in this book as speculators. So how does speculators create panic in the market?
Speculators are the ones who, like if you see in the nature in the wild, they're like those tiger or the lion and the prey. So as soon as they see something in the grass, they start ringing the warning bell. Those are the people who are the speculators. They either think there is huge gains to be made, or they think, there's big losses to be made. And 6 to 7 times out of 10, they're wrong.
Okay.
And those mistakes is what Benjamin Graham says gives you opportunities.
And the third thing is when the market falls, like in corona crash and economic crisis, all the share prices will fall heavily, and investors fear that my stock portfolio is decreasing. And the author says to view it in an opposite way, where you have the opportunity to buy the stocks at
a discounted price.
Yeah. So how does this point help in our investing?
It does happen because when the market crashes, we think we're going to lose everything. And out of that fear, you also start throwing everything in the market and trying to get your money out. But you must realize, if you have been smart and you've been investing wisely, it's only a transitional thing. Whatever it is, unless the world is ending. If the world is ending, it doesn't matter if you have money or don't have money. Other than that, if the world is not ending, it will recover. Whatever happens, will recover. And you've seen it in history. World War I, World War II, all kinds of wars, all kinds of pandemic. World recovers. Given time, it all recovers. So he says, be patient and take that opportunity as an opportunity to buy things in discount. If some grocery store is in sale, you don't panic and throw everything out of your house. If anything, you'll go buy more.
And also, these days, Amazon and Flipkart announce a Big Billion Days and a Great Indian Festival. So we should view it like that also.
Correct, exactly. But as an investor, when it comes to money alone, we find it very hard to take loss. Let's say you buy ITC today at whatever, 400 rupees. Tomorrow it becomes 300 rupees, you feel very bad. But you bought an iPhone for 1 lakh. Tomorrow that price has become 90,000, you don't care.
Yeah.
You're like, it'll always keep going down because new things are coming.
We feel that I have bought it just as the phone is released.
Correct. But when it comes to investment, there alone, for some weird reason, we have made such that we think, I'm a fool.
Yeah.
Even houses, you buy a house now, you don't immediately see the buyer selling it at a discount 6 months later, you don't feel upset about it. You feel you made the right thing.
Okay.
So that's what, it's just our emotions, and that's what Mr. Market is. But one thing you must remember, his idea of investing has changed dramatically from the time Benjamin Graham used to invest to what we are today. Finding things, his cigar bud idea is really difficult nowadays to find these so-called low-hanging fruits which are just lying around. He talks about it, market being extremely skewed, and you can find these bargains if you keep looking.
Okay.
But in today's world, with the information, the way it moves around, it is harder and harder to find things which are undervalued.
Okay.
So you have to look more like Charlie Munger when it comes to this, that you focus on a few companies in the long term and buy potential businesses which are going to grow
Mm.
with a moat than looking for cigarette butts or cigar butts, as he says in the book.
Warren Buffett refers to this book as primary thing which helped him in investment.
Warren Buffett is completely influenced by Benjamin Graham initially.
Okay.
All his initial success and growth for Berkshire Hathaway was on the principles of Benjamin Graham.
Mm.
Then came along Charlie Munger,
Mm.
who he credits as architect behind Berkshire Hathaway
Okay.
to become the behemoth it is. And that when his view on Graham's ideas changed.
Mm.
So yes, Graham has value if you're starting investing. But if you want to make that money which you make into truly remarkable wealth,
Mm.
you will have to pivot into what Charlie does and what Charlie did with Warren. But for you to build that war chest, you need to use Benjamin Graham's method.
Okay. And the last thing I'd like to ask is, I find other books like Learn to Earn and The Education of a Value Investor, I could read this easily. But this book, the terms are very difficult and find it difficult to read.
Those books are successful because they have built off this book.
Okay, this is the base book. So
Yeah.
how should I complete reading this book? I'm
You
reading
have
it.
to read the book by reading it slowly,
Mm.
keep a dictionary
Mm.
and go bit by bit and keep asking me and Anand, anyone you see, 1,000 questions
Okay.
and ask for clarifications. You're lucky you work with Anand.
Mm.
So you can catch Anand anytime he's walking in and out of the studio and ask him, sir,
Mm.
I read this, what does this mean? He'll explain, be more than happy to explain it to you.
Okay.
If you feel shy,
Mm.
that's not on us,
Mm.
that is on you.
Okay.
So think about that.
Yeah. So I hope that you had some understanding about intelligent investor and the author Benjamin Graham. So if you found this video informative and interesting, please like it and share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.